I think access to good information is so important to evaluate the property. Learning how to evaluate information you can find online at like the county clerk's websites, how to recognize various liens and issues that may affect the property are so important along the way. And those help you learn to negotiate a deal even better oftentimes. We find so often that sellers who may have done a loan mod 2 years ago, 4 years ago, who knows how long ago, because they're making no payments on it, they've forgotten about it. You know, it's out of sight, out of mind, right? And so learning how to research things, to know what is out there, helps you do better. How to recognize lien issues and how they may or may not affect your property are important. Maybe it's a profit center for you. Maybe it's something you've got to adjust as you're negotiating it. And sometimes when you learn all these things, you have to learn how to walk away from the deal because it's just not a good deal for a lot of reasons. And you have to learn how to look at, as I said earlier, construction issues. One of the big things, and I've talked to so many wholesalers in the last 30 days, probably 6 or 8 wholesalers, about learning how to look at sewer lines in older homes. They don't realize that cast iron sewer lines have a life of about 50 years. And if you're buying a house that was built, let's say 1970 or before, the odds are you have a cast iron sewer line and it's bad. Mm-hmm. And if it's not bad, it's going bad quickly. Well, that could cost you real fast, $10,000, $15,000, $20,000.
Now, Scott, this is different than galvanized?
Well, cast iron and galvanized are the pipes in the walls usually. Or under the house. This is your actual sewer line.
Okay, gotcha.
It started out from what I've learned, that you go back to the 40s and early 50s, they actually had tar paper sewer lines. I've only seen that twice ever. Tar paper.
Tar paper.
Just like you put on your roof or on the side of the wall of your house. Then it went to clay, meaning that terracotta clay tile, which tree roots would go right through in a heartbeat. Then it went to cast iron.
Okay.
Then after about the early to mid 70s, it went over to PVC.
Okay.
And little things like, and this just happened to be on a house that I bought, so I know this business really well. And in the front yard, we see 2 PVC cleanouts. So we're going, great. And the house was built in the 70s. We're going, the whole thing has PVC. Well, guess what? It was PVC from the street to the house, but under the house was cast iron. And guess what was bad? Under the house. So we had to reroute the sewer line around the house and tie it back in. And that cost, another $8,000 that you weren't expecting or anticipating. Luckily, we had the room and the ability to do it. I talk to these young wholesalers because they don't understand this. They just do an estimate. They don't know how to properly estimate repairs. They use, we're just going to use $1 per square foot as an estimate. I saw a house the other day, using their formula, they were about $26,000 on rehab. When we got through looking at the house, it was a $60,000 rehab. And so either they're going to tell a unknowing buyer these kind of things, and that buyer's going to find out that they're, $36,000 upside down on repairs to get the house fixed properly, or they're not going to be able to sell that house and make any money on it. And so I just think that for the novice investor, access to information to evaluate homes, knowledge of the things we just talked about are so important. But then, it's also, you've got to have access to capital. I do a seminar that's called about money all the time. And I'm going to ask you this question, Naveen, see if you have the answer. What are the 3 most important things in real estate? And this is a trick question, okay?
Okay. Do I get multiple choices?
No. What's the most common answer, do you know?
In real estate, okay. The deal maker?
No, location.
Oh, okay.
What's number 2?
Market?
Location. No, location. What's number 3?
Uh-oh. And location.
So that's a common answer in the marketplace. And my answer to it is this. It's money, money, and money. Because if you don't have access to money, it's the availability of it. If you find that great deal you want to buy, you're not able to buy it, right? Unless you have your own capital. It's about the cost of the money and how it affects the transaction for you. And it's about learning how to save money as well. And you've got to learn all three of those in order to be successful in this business. Because you can find great real estate all the time, but if you don't have the funds to buy it, you ain't buying that real estate. And so learning how to use money, how to find it, how to apply it, I think is so important too. So I think those are some of the things that, newer investors need to learn and to get into it. And I'll go one step further. And I often say that real estate investors, their thought process stops right at the end of their nose. They go out and they hunt the deal, they do all this great stuff, and they're ready to buy it, but they haven't thought downstream, once I buy it, what am I going to do with it? Mm-hmm. And they haven't built into the equation things like, well, what if my first option doesn't work?
Yeah.
Maybe I want to do a fix and flip.
Yeah.
But what if it's not selling for some reason? What if while I'm in the middle of my fix and flip, the marketplace changes on me? Or this happens or that? And by the way, that's real life, and those things really do happen. What's my secondary option? Mm-hmm. What if I borrow hard money and it's for short-term private capital of some type, and I've got a 6-month window on it, but now the market changed, I'm not able to sell it to cash out. Mm-hmm. Do I have the ability to refinance it? Mm-hmm. I don't know. So you have to think, here in this business, you can't just have blinders on and be thinking unilaterally on one course of action. You got to go, what if this happens? What are my other options? And be prepared to handle that. Because if you don't do it, unfortunately, bad things can happen. We don't want that to happen out there.
Right. I say it differently. You got to have multiple exit strategies,
Absolutely. Amen.
Yeah. Because in today's world, one is not going to work anymore.
You got it.
Yeah. Okay. So as we are wrapping up here, Scott, what is any other word of wisdom that you can share with the audience?
I will say this. I have found over the course of my career, finding the right people to partner with have been so important from a business perspective. Sometimes, you may think you can do it all. Yeah, no. We all need help. We all have strengths and strong suits and weak suits. Whenever you can find a mechanism that blends those things together, it helps you. And you can do more together oftentimes than you can do apart. I think that's a wise thing to do, and finding people that can help you grow and build together is important. So once you do that, I think getting, as I said earlier, learning how to find good information, not just something online somewhere, but quality information that helps you build and grow in your business, helps you learn things the right way, will help you go down the path. And then it's just be wise. Watch the marketplace, see what's going on. Know what's out there. If you're going to buy a house for cash, know what your options are. If you're going to buy a house for terms, great. Know what your options are. And as you said, multiple exit strategy, of course, is such an important facet of our business. But if you're brand new to it, you don't know what those are. But you've got to dive into this stuff and start learning. And it takes time.
I just remember in my early days, I bought a house and I couldn't sell. So I ended up owner financing it because that was the viable strategy available. And then I got disappointed because they pay off the note too soon. I'm sorry for this interruption. I've been asked a lot about passive investment. And let's be real. There is nothing passive about being a landlord unless you have a really good property management company. So if you own an Airbnb or a short-term rental and you want to get back your time, please give our team at Buzz Vacation Rental a call at 281-549-8432 or go to our website at pm.buzzvacationrentals.com.